Welcome to No Free Lunch, Africa's freshest business and tech podcast with me, your host, Greg Stewart. And in our podcast today, we're talking about shifts in African capital markets that are currently surging ahead of other emerging markets. And we'll be looking for some great insights from my guest, Garth Klintworth, the Chief Representative Officer for ABSA's New York office. Garth is an economist graduate from Wits University, a seasoned South African financial executive with over 2 decades of experience in global markets, derivatives, and strategic banking leadership. Welcome to No Free Lunch, Garth.
Thank you. Welcome.
So you've just made the move to New York. How's the transition been from energy in Johannesburg to mega energy in Big Apples and their busy pace? What's the one thing that surprised you about the change between the worlds you've left and the worlds you've gone into?
Thanks, Greg. Yes, I think that the change has surprised me, even though I thought I was prepared. Tariff discussions, geopolitics, foreign policy was already in the news flow, but it seemed to hot up a lot when I arrived. We saw the major changes to tariff suggestions when I got here. So it's been very interesting. Unfortunately, South Africa has been somewhat one of the countries being used as an example in this global discussion around global trade, where capital will move, how it will be invested. And I think just reflecting on the US a little bit, having worked in global markets and understood that the US or other G7 countries really dictate economic cycles, what's really surprised me as someone who needs to settle into an economy, buy things like a car, get housing, is the inertia in this economy. The momentum is unbelievable. I was half an hour late to purchase a car, and the salesman said, "Bad luck, I sold it." The velocity of turnover is just so surprising for me. The scale of the economy compared to South Africa, as much as I thought I understood it, has surprised me immensely. It's going to take an incredible amount to disrupt the US economy. I'm less skeptical than I was when I arrived.
Yeah, especially with booming industries there, such as the AI industry driving massive, stock price growth. I had a figure, I think it's something like close to $100 billion spent on AI developments there in the last year in the US. It's an astounding amount of capital, and I think if you look at, I think Texas's GDP is bigger than South Africa's on its own. So it is a big difference.
Yes, Elon Musk, someone from South Africa. So it speaks to our ability to develop people, to create innovation.
Sure.
Received a personal paycheck of $1 trillion. I mean,
Yep.
that's a crazy number. I mention it because everyone will understand him and may have read in the news. But the economy, and there are so many other companies and people earning mega amounts of money that I think in South Africa we don't really appreciate the ability to find investment capital of size to deploy
Yes.
into an idea, and the sheer number of those opportunities is something that still boggles my mind.
Yeah. And I think as somebody a market commentator who sits and watches these markets all the time, one of the worrying things is that that capital flow isn't flowing to Africa as we would like it to. Africa needs a lot of investment, and that's not happening. Can you talk a bit about the African capital markets, where it seems to be poised for a structural shift away from high risk, the markets in general? Where does Africa fit in with that, and how do you see that market developing?
So I think the best headline to give you to amplify the importance of the African market is a US administrator, part of Donald Trump's team, said Africa needs to come to the party for world peace. He was speaking in the context of the need to manage critical mineral supply chains.
Yeah.
Those critical minerals that Africa is endowed and gifted with is part of the fourth industrial revolution, whether it comes to batteries for cars or powering data centers for the AI revolution, or for the armament development for the next development stage of the arms industry, which some people would argue is necessary for peacekeeping. So I think Africa was seen as the last frontier or the final frontier. What I'm feeling, having spoken to many ambassadors, policymakers, champions of industry, is that Africa's time must come to the fore now and is very vital for the global economies to survive, and may I say it, for the formation of what the future of foreign policy will look like. So Africa is on the radar in a very big way. I think that's a very positive thing.
Yes.
I think what worries a lot of people is the fact that the capital markets, other than South Africa, which unfortunately is in the spotlight from an American perspective for different reasons, in a negative way, the African capital markets are still undeveloped to allow capital to really flow friction-free or without a very large credit premium associated with it. So a lot of work needs to be done in terms of policy harmonization, in terms of collateral management, in terms of solvency law, and the development of what I call execution liquidity. One of the biggest concerns for investors is FX convertibility risk. So as a result, major infrastructure and major developments are asked to be done in dollars, which isn't great, given that we need to also develop these economies and their local currency markets.
And apart from the risk of the currency volatility, you're also seeing large infrastructure developments, and we've seen it in the Lobito corridor investment by the states. And I actually read a report this morning that was talking about the fact that, and okay, the data, it's one of these annual reports, but the data unfortunately dates back to 2023. But it indicated that America's investment in particularly infrastructure in Africa had outpaced that of China in 2023. And a lot of that is linked to those critical minerals, places like the DRC, where the US has just negotiated the peace deal, was driven largely by America's requirement for those critical minerals, alongside local manufacturing investments in the US, where they're actually developing major manufacturing facilities to, I think they just convinced one of the large companies to move their latest factory investment from the UK to the US. So you are seeing inflows from America into Africa. What more can Africa do, especially in infrastructure? Where do you see the synergies developing between the US and Africa? Not South Africa necessarily. We understand there's strained relations, but where else are there synergies that might be still possible growth markets?
I think the first point I want to make is that the commercial deals that the US wants to do, and I believe it is true for Europe as well, it may be articulated in less of a forceful tone though from Europe, but I do think the theme persists. And that is, the commercial terms are now linked more than ever to national interests.
Yeah.
And so, unfortunately, politics is going to get amplified, or foreign policy is going to become a longer part of the strategy around deploying capital than it may have in the past. I think historically, national interests, geopolitics, foreign policy have always been there, but I think that they got diluted and fell by the wayside in a peaceful world. I think COVID scared many people into recognizing where they have deficits about their independence and how they can be self-reliant into the future. And that's amplified the national interest discussion. I think with shortest delivery economic principles around supply chain management, people thought that the world was a safe enough place that it didn't matter who you did trade with, and your input materials into certain things was not something that required a lot of consideration. The focus was more around intellectual innovation, and it was more around, can you come up with the right ideas for you to progress into the future and to remain dominant? The raw input into developing those concepts was less of a consideration. I think COVID taught people to realize that actually our national policy, our foreign policy, and our defense mechanisms have to put more attention onto the supply chain as well, and not just innovation. And I think with what happened in Ukraine, I think with the narrative coming out of BRICS around being a little bit anti-West, I think the dominance and the rise and the rivalry of China and controlling the supply chain has caused people to think about the ability to be truly self-reliant and to protect their national interests. I think adversarial language around some people who supply into the West, like Taiwan, has caused people to be a bit concerned. We saw just in normal commercial operations, the backlog that developed in the automotive industry because you couldn't get chips. We know that led itself into the armaments industry, because so much of this is AI driven and technologically driven, this weaponry discussion. It's caused the people to really think about where they deploy capital. In the US, even under the Biden administration, access to critical minerals was always seen as something that needs to be done. And there were big investments. And the US has seen Africa as part of that solution. So I'm not surprised to see the attention placed on Africa as early as 2023. We don't have the numbers for 2025. They always come out with a lag. The Trump administration, I think, continues to support what the Biden administration did in terms of investment into Africa, just in a different way, though. People rightfully should call foul for some of the welfare checks and some of the aid money that was cut. But an administrator in the US said, look, stop focusing on $500 million of aid money to Africa. Rather focus on the fact that US Exim Bank has about $7 billion worth of credit enhancement guarantees that they're willing to put into certain projects. That's the real prize. Just look at the sheer scale of that willingness to do business. And I think they're right in emphasizing that. And I think we may have got a little bit distracted by the repurposing of some of the money from the US. Unfortunately, for some people, the access to that money now comes with certain terms. It's got to cut out China almost in a way. It doesn't mean that China product can't be used in investments, but it's got to further the interests of the US's national interests. And I think that's what some people are struggling with. I think the administration has been very clear that they don't want to use unilateral policies like AGOA, that they would rather be targeted through bilateral trade agreements. I think that they want to do AGOA. I think the administration just didn't have the time to get to it by the time it expired. I think the administration says they would like a modernized AGOA. I think what America is doing is they're saying we only have so much to invest, even though it's a big sum of money. We need to invest it where we know our national interests can really be supported. I think the US is going to focus on the west of Africa. I think the east of Africa will be tactical. I'm not saying no focus there, but deals like we've seen with DRC will be the role that they would like to replicate. And that is because I think they don't want to invest in areas that potentially threatens the southeastern shipping lane and supply chain. They want to concentrate their efforts where they can get the best bang for buck. So I think Africa can really benefit from a lot of capital investment. The US definitely wants to make that investment. They're just going to be very specific around who they deal with and under what circumstances, and it's got to be for the US's benefit. Having said that, about 97% of mineral extraction out of Africa to date has been in a very raw form. There's been very little beneficiation taking place on the continent. And I do feel that the US understands that they need to create a bigger ecosystem and allow Africa to benefit more than they have in the past.
Yeah, I agree there. And I see the moves being made in some of the decisions, some of the investments that have been made. And all it requires, from my perspective, is a willing partnership. I think your comments on removal of some of the aid is spot on. I think that Africa could benefit far more by growing industry, growing manufacturing capability, growing skill bases, ultimately being able to afford things like connectivity and electrification. I mean, we still have major deficits of energy supply for some of these industries, and the industries may well move to Africa if they had a more stable energy supply, just as an example. We've got a young, growing workforce, the largest in the world, and there's certainly opportunity here, but there are some of those key supply issues of energy, of connectivity, of security that Africa needs to address. So talking about that, from your vantage point, where to now, looking ahead, how do you envision ABSA's role in fostering more integrated African capital ecosystem? And what advice would you give to leaders in this space? Because the leadership, this obviously in the spotlight this week is the whole G20 saga with the US not coming here and all the brouhaha about that. But it is a clear indication of a breakdown of a relationship between the two countries. And that's not going to foster any capital inflows anytime soon. What advice and perspective would you give from wearing your ABSA hat and, being familiar with capital flows, and what could the leaders here be doing?
So South Africa is listed on the South African Stock Exchange, the Johannesburg Stock Exchange. There's no doubt we are seen as a South African company, but people also recognize we're a Pan-African company. And
Yes.
we have a very large reach into the rest of Africa. And ABSA is, I would say, neutrally aligned politically. They refer to their banking products and they refer to their technical capability to help projects get done. ABSA has demonstrated that it can deploy balance sheet and it can work with multiple investment partners outside of the countries where they've got a physical banking license. We've done a lot of balance sheet work and made investments in the DRC ourselves. That is true also for Angola. So ABSA, as a project finance house or a house that can provide risk management solutions to these projects, is without a doubt a claim we can make, and we'll continue to work with both Chinese firms and American firms and European firms. And I believe that we want to see Africa prosper. We want to see Africa manage to complete these bankable deals. And so we will work with both regulators and commercial product providers, and we will deploy our capital alongside other capital. I think what's important is that regulators and government departments recognize the need to work with other government departments in a way that creates a win-win environment. If certain countries are too restrictive in terms of their labor laws or their beneficiation laws or ownership laws, that capital will just follow where the next best deal is. You're right. Africa has such an immense need for infrastructure build. Energy has to be at the top of that. You can have no mining industry without energy. And because there is just so much demand relative to the supply of capital, the best structured deals will always win. So I think it's important for administrations to realize that there's not an abundance of capital and that they need to strike a great balance between what they are looking for and what the capital needs and the terms that the capital wants to operate under. That's quite a generic statement. It seems quite obvious, but I would say through this trade process, we've seen some people very successful in negotiating trade agreements, and we've seen other countries fall behind and become a little bit slower and have an inability to come to an agreement with capital suppliers. And I think given that there's a finite amount of capital, you could find that some countries will do really well out of this, whereas other countries will fall into second place.
Well, Garth, I'm going to leave it there. And I want to thank you for some of the insights you've shared with us. And hopefully we'll see, an improvement and a response from African governments ensuring that their policies and their structures are actually open to receive those financial inputs that, as you say, are available, and that there is growth, and we do see investments in things like infrastructure that is so needed. Thank you very much for your time, Garth. I appreciate it.
Well done. Thank you. Thanks, Greg.